Hey guys, James here with Waterford Business Solutions. Today I wanted to talk about a huge payroll thing that we see all the time, which is child support and wage garnishments. When you're hiring new employees, we have to make sure that we submit new employee paperwork and notify the state government of these new employees so that any type of state or legal mandates for that employee can be communicated to you. Upon hiring, depending on your state, you will fill out the new hire paperwork, submit it to the Department of Labor, and the Department of Labor will go ahead and process that person is now hired, pull them out of unemployment wherever they may be, and help affect the unemployment numbers and the labor metrics for your state. That's one reason to do it. But the other, and quite frankly more vital reason to make sure that we're doing this is so that any type of legal situation tied to that employee is reported to you. If that employee is legally required to pay child support or some type of wage garnishment for some lawsuit or anything that they were involved in there, that is how the state is going to communicate it with you. With those child support or wage garnishment orders, you will receive a letter from the state government informing you that you need to withhold money for that employee. At no point should you be withholding any money from the employee for child support or wage garnishments prior to receiving that letter from the state government. It's also super important that even if the employee comes to you and says, hey, I finished this, it's paid off, you don't need to hold it anymore, until you get a letter from the state government notifying you that you no longer have to withhold child support, you have to continue withholding child support. If you do not do this and if you ignore this, it can create a huge issue and you can be out of compliance, and you as the business owner could be fined for not withholding the child support correctly. And now it's a you problem, not an employee problem with everything here. So that is a huge no-no, is you only withhold based off of letters received, and you stop withholding based off of letters received. And if you've got an employee that's got wage garnishments or that's got a child support order in place, as soon as you let them go, you really want to let the state know as quickly as possible so that they are able to go ahead and remove the fact that you should be paying in on a weekly or monthly basis for whatever that order is. It's also super important that you make sure that you go ahead and follow to the T what that letter says. The letter will instruct you exactly what percentage to withhold, exactly the maximum amount that they should be getting every single month, exactly the maximum amount of their take-home pay that can be withheld. It'll all be listed directly in that letter. So it's super important that you go ahead and make sure that you follow that letter to a T, because if you don't, again, you as the business owner can now get in trouble for not complying with that. So please, if you take nothing else away from our video today, make sure that you're waiting on those letters for modifications to child support or taking out child support or wage garnishments, and make sure that you thoroughly read those letters. It always helps to have an accountant or a payroll advisor or something there you can send that letter to, and they are there to help you. They are there to advise you. They are there to work with you to ensure that you are complying with exactly what that letter states and you're complying with the state laws. Now, when we're looking at child support, it's super important to understand how it's going to show up on your books too. We never want to see child support showing up on your profit and loss or income statement, because child support is not an expense for you. Your expense is the wages that you're paying that employee. So just like covering or paying for benefits that employees are covering 100%, everything for child support should be showing up in your wages income or your wages expense account on your P&L for that employee, wherever you may have it broken down there. And it should always just show wages, because you're not physically paying child support and incurring an expense for child support. The employee is. Your expense that you're incurring is for the wages that you paid that employee. Child support should be a deduction or a garnishment from the paycheck, which, while it doesn't affect the wages on your P&L, it affects the amount of money that is withdrawn from your bank account, and thus it shows up as a liability on the balance sheet until you pay that liability to the state. As we're talking about paying that liability, when you're working with pretty much any payroll system out there, unless you're working with a payroll outsourcing company, if you're working with Gusto, if you're working with QuickBooks, if you're working with ADP, you will need to make sure that you go in and pay that child support. That is not going to be something that these payroll systems do automatically. This is not a tax. This isn't something that these systems are designed to do automatically for you. You will have to log in on whatever basis you're paying the employee, or whatever basis it tells you in the letter that you receive from the state government there. Log into the state portal, log into your account that you set up and register. Make sure that you claim that employee and put in that child support order number. That's how most states do it. I'm not going to say every state, but most states give you a child support order number so that you can claim that employee and they'll stay in your portal until you dismiss them. And then put in the amount of pay that they received and the amount of child support that you are garnishing, so that they then, through the state website, will go ahead and draft your bank account. That is, again, not something, unless you're using a third-party payroll provider. Most payroll systems out there are not, I repeat, are not going to pay child support for you. We've had plenty of clients who thought that their payroll system paid it for them, and they came to us, we're auditing their books, we're auditing their balance sheet, and we're like, hey, why do you owe so much in child support? And they don't know, and we take a look and see that they've been withholding all this money, they've been pulling it out of the employee's paycheck, but they've never been paying it. That's not the employee's fault at that point. That is the employer, and the employer is now going to get penalties and have to pay fees for not paying that child support in a timely manner. We don't want you paying more for something, especially for something that it doesn't cost you anything. This isn't a tax on labor. This isn't a payroll tax. This isn't insurance. This is something that is 100% your employee's issue. You, as the employer, are just required to withhold it and pay it to the government. While it may be a little bit of a time-consuming task and it may be a little annoying there, it's nothing that is really should cost you anything, and thus we want to make sure that we're staying on top of paying this on a regular basis. But once we go ahead and we make that payment, we're going to reduce that liability account on your balance sheet to show that we've paid it down or paid it off and taken it down to zero, and we no longer owe any child support. Like I said, once the employee leaves your employ, whether they're terminated, fired, go ahead and leave on their own, whatever it may be, we want to make sure, again, we go into that portal based on your state and report that they are no longer with you, so that the state's not expecting to continue to receive child support. Now, I do want to take a moment today. We're going to jump into QuickBooks at least, and we're going to show you an example of how to do this child support in QuickBooks so that it's super easy for you to see what you should do, because we see a lot of people do this wrong and put it in as a deduction instead of putting it in as a garnishment. While there's not a huge difference, it does help make things a little simpler and help set things up a little more automatically for you with garnishments. Same thing really works here for a ADP and for Gusto, they have a garnishment section. I'm just not going to take all the time today to show you both of those systems too. So let's go ahead and jump on over and take a look at that. Okay, so I've gone ahead and come in here to my QuickBooks Online account, come down to my payroll area, my employee list, and picked out the employee that I'm going to be working on today that I received a letter on for a wage garnishment or child support. I'm going to scroll down here to deductions and contributions. This is what we're looking for here because this is where we're going to pull deductions, contributions, and garnishments out of here in QuickBooks. And I'm going to click Start here. Again, we don't want to select anything from this deductions area. This is for our healthcare, this is for retirement contributions or retirement deductions, this is dental, vision, loaner payments, anything like that. Whenever we get a court order for having a garnishment for legal matters, for loans, for child support, for creditors, whatever it may be, we want to come down to this garnishment section. We're going to click on Add Garnishment. We're going to select the type. So we've got basically 3 different types, either child support or spousal support. Fairly self-explanatory. Federal tax levy, so if they are in arrears of their federal taxes, you could get a notice from the federal government notifying you that, hey, you need to withhold X amount to pay their past due federal taxes. And other garnishments. Other garnishments are going to be, maybe they've got a wage garnishment from a creditor because they defaulted on a loan. Maybe they've got a wage garnishment on a legal matter because they owe something on a legal matter. Pretty much all of these are going to look exactly the same. When I click this, it's literally going to, the only difference is going to be a little bit of here because, again, it depends on your state and everything. I'm going to do child support here. We're just going to want to go ahead and put on a description here of how it appears. Generally, I put child support or maybe child support per court order, maybe even add the court order number in there. Then we're going to want to put in the amount requested. The amount requested, this is going to be per paycheck. And if you're ever confused on that, you've got that little info screen right here to go ahead and put that in here. So you can put that amount requested. Again, that's coming directly from the letter that you received. Then again, on that letter, it should tell you the maximum amount of disposable income or take-home income that we put in there. Most states generally say can't exceed 50%, but again, it should be listed directly on that letter there. Now, if this is for a federal tax levy, they don't care about your disposable income, so you'll lose that option there. Again, we'll want to say the description is tax levy or federal tax lien, federal tax garnishment. Maybe put the number there just so that they know. And then other garnishment, we'll want to be a little more descriptive here based off of the information you have to put it in. You're going to want to put in amount owed. Now this here is going to be the total amount owed. So unlike with child support, we're not taking a look at just the per paycheck amount here. We're looking at the total amount owed, which again should come to you on that letter. Then we're going to go ahead and figure out how we calculate everything. Again, should come to you on the letter. It may give you a flat amount, or it may give you a percent amount here. So that percent amount shows, hey, 50%, 10%, whatever it may be, or $500 a paycheck. Again, it should be listed on that letter, which is why it's so important to make sure you have that letter. And then the alternate, garnishment cap. This is going to be a lower limit that may have a alternate cap. It may give you a little bit lower, but it's not always on every single garnishment here. So again, refer to that letter, and if you're ever confused or ever unsure, you really want to talk with or work with an accountant, a EA, a CPA, a payroll specialist, someone there to help interpret that letter for you. Well, thank you so much, guys, for joining us today. I hope you thoroughly enjoyed this video and it was useful. Please go ahead and if it was helpful to you, like and share this video. Leave a comment with any questions. It really helps to expand our reach, along with going ahead and subscribing to our channel to get more information just like this. If you've got concerns of your books not being in order, or your payroll, taxes not being in order, or just anything financial in general, please feel free to reach out to us here at Waterford Business Solutions and give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com. Until next time, have a wonderful rest of your day.